Let's talk about the monumental money shift into dividend growth stocks. People think there's this big sell-off. Believe it or not, it's a rotational strategy. We have a ton of charts showcasing where the money is flowing. Let's go ahead and get to it now. So let's turn back time a little bit, go back to what really caused the biggest money shift of all, and that was the June CPI report that came out on July 11th. Here I've got this awesome relative chart. This is the Russell 2000 IWM relative to the NASDAQ 100 triple Qs. If you remember back in the day, people only wanted to buy a handful of big mega cap stocks. And we were making the case that you probably want to be buying and dipping your toes. And that CPI report really showcased that the Fed is going to start cutting interest rates. And you can see here how small caps relative to big cap tech just started this monumental money shift, just a beautiful thing. Here's what's great about this. If you look at since July 10th through September 4th, these are the sector performances for the S&P 500. This is unbelievable to most people. If your account is down huge over the last 2 months, you might be long a lot of tech, maybe some discretionary names, but let's just look at what is leading the charge. It's dividend growth, right? Over this time period, real estate stocks, right? Left for dead areas, they're up 13%. Utilities are up 10%. Financials are up over 8%, staples 8%, and then you've got tech, communication services, and discretionary, and even energy all at the bottom of the bucket. So this is what a rotation looks like. This is not a huge risk off market like the media tells you it is. But here's some awesome charts that I really want to drive home what's really happening with the stock market. If we look at the year-to-date S&P 500 through July 3rd, you're talking about just over 6 months of data. The S&P was up nearly 17%. At that moment, the percentage of stocks that were outperforming the index was just over 20%. It was a crazy low amount of stocks that were outperforming. The average stock performance at that time was 5.22%, drastically underperforming the average of the big caps, which was 16.92%. Now you fast forward just 2 months later, right? This is 7/3. Now we go to September 4th. Look at how things have been changing. On the surface, the S&P didn't even move. It's still up 16.83%. And then you've got 35.5% of stocks outperforming. And then the average stock performance has doubled in that time frame. It went from 5.22% to 10.33%. Markets are flat, right? They've gone nowhere. But under the surface, breadth is improving massively. And it is dividend growth. So let's go ahead and look at some of the areas that are getting this big resurgence, this equalizer trade. Well, of course, it's going to be real estate, right? When rates come down, real estate, they get a boost, right? They basically trade inverse to rates. Wonderful, wonderful area that is getting a lot of capital going there. Utilities. All right, your grandma and your grandpa's stocks, they are getting a lot of love as well. Just tons of green. Why? It's because of that big, delicious yield. You've got money markets. They are going to be coming down over the next year plus by a large percentage. People are going to be looking for dividend growth stocks. What else? What else benefits when rates come down? Well, financials. Here we've got the XLF. There's a lot of dividend growth names in the financial sector. You see a lot of green going into this area. Has been one of the leading areas that we have been very bullish on for many, many, many months. Don't forget staples. Okay, you're talking about, big department stores, big retailers, soft drink makers, food makers, things that you need to have no matter what the economy does. They pay big, juicy dividends, and you can see a lot of money is flowing there. But don't give up on your dividend-rich pharmaceutical names. A lot of these were just beat to shreds last year. They are doing very well now. Why? Because of dividend growth. We're talking about some of the best performing stocks of all time. Lots of green. There is money flowing here. You're noticing I'm not showing tech, right? Because that's not where the money is flowing. So let's look at one all-star company that we know very well in our data, Eli Lilly. You know, they're all about the GLP-1 space, got some awesome drugs. Check out these green bars. That is nothing but money coming into this stock. This is over the past year, not one sell signal in our data. And that just shows you the stairway to heaven if you focus on great companies. Why am I talking about it? Well, what makes it a great company? Well, we can see that their revenue growth since 2020 continues to climb. You can see that in this green-blue area here. Also, look at the bottom line, it's expanding, looking at their net income. So these green stair steps, that is the stairway to heaven. A company that is this profitable when business continues to boom is going to get institutional action. Why are we talking about dividend growth? Because Eli Lilly is one of these compounders that has a CAGR of 15% going back to 2018. So 2018, their annual dividend payment was $2.25 per share. 2023 was $4.52. The estimates as we close out 2024 is $5.20. Good luck finding a better dividend growth name. One final chart to show you what we love to do as a firm, and that is find outlier companies. These are the ones that seemingly go up and up month after month, year after year. Eli Lilly has been all over our research. These blue bars, these are indications of when this was a top 20 stock on our weekly report. The more times we see stocks recur on this report, generally the better. We believe institutions are all loving this type of name. And when you look at the fundamentals that I just showed earlier, revenue growth, net income growth, dividend growth, this is one of the best companies over the past few years. People are all talking about AI. They are missing some of the other big money waves out there. So listen, don't listen to the media telling you that it's a big sell-off. It's a huge rotation that's going on. If you're a professional investor, if you are a serious investor, you should see the money flows that Map Signals does provide every single day. Get a Map Signals Pro subscription. I will talk to you guys later.